Today, we are checking in with one of our partners to get some advice on health, not your physical health, but rather your financial health. And one way to measure that is through your credit score. But what is it exactly? How do you know what your score is, and how can you improve it? For that, we're turning to Trevor Bowie. He works with Untitled Atlantic, a company that specializes in home equity and mortgage financing. He's joining us this morning from Charlottetown. Good morning, Trevor.
Good morning. How are you?
I am so good, and I'm excited to talk to you about this topic. This is something that causes a lot of confusion for many people, but your credit score, it's not just a magical number. So tell us what it is exactly.
So a credit score is a number that's assigned between 300 and 900 that essentially reflects your credit history, factors things in like your repayment history, your credit limits, your balance, your length of history, and if you have any collections or judgments on there.
Okay, so a very important number indeed. And some people might not be sure what their credit score is. They might not have any idea. And we often see sometimes there are different ads popping up on television or on the internet advertising, find out your credit score here. But where is a reliable place, a safe place where people can find out their own credit score if they're watching this at home right now?
Okay, there are essentially two main credit reporting agencies in Canada, and that's Equifax and TransUnion. So you can go onto their websites. And there'll be a link there where you can request a copy of your credit bureau. And also some banks on your online banking will have a link where you can get a copy of your credit report and see what your score and your history is.
Okay, good to know. What sorts of things will affect your credit score, both for better and for worse? What sorts of things should we be avoiding maybe, and what sorts of things should we be doing?
Okay, the most obvious one, of course, is don't miss any payments. So for credit cards, you want to make at least that minimum payment. If you can pay the balance off, of course, that's preferable, but at least make sure you make that minimum payment. Cell phone bills, make sure you make that payment every month. And that's probably the biggest thing. The second one that's not so obvious is to keep as much room between your balance and your limit as possible. So if you have on your credit cards, try to use less than 30 or 40% of that credit. There are a few other things that are not so obvious, and that's to try to keep your inquiries down. So don't be a credit seeker. If you're applying for multiple credit cards or a loan to buy furniture or car loans, and you're doing that all at the same time, that can hurt your score as well.
Okay, good to know. There are, of course, times in life when you are going to be looking for a loan or some extra money. So if you're looking for a mortgage, for example, what are lenders looking for when it comes to credit score? Is there a certain threshold or a certain number that you should be shooting for?
Yeah, typically they're looking for 680 or 700 or better. So as long as you have made all your payments in the last 24 months, they're going to put most of the weight in the last 24 months. As long as you've made all those payments on time, your credit limits aren't maxed out, and of course you don't have any collections on there. Those are the biggest ones they're looking at.
Okay, some great advice. And, it's great to talk to folks like you who know what you're talking about, because like I said, this whole credit score thing, sometimes it's very confusing. You're not really sure where the numbers come from. So now we know. And of course, we're going to have a link to your page on our website after the show for our viewers at home. So thank you so much for sharing your knowledge here with us.
Thank you.
All right, that was Trevor Bowie, and he is with Untitled Atlantic. We'll be right back after this quick break.